Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday, the Australian dollar ended in somewhat a mixed pattern, posting a long-legged doji and therefore giving indecisiveness in terms of the challenge towards that key area of 63 figure 30, the 60-day simple moving average. Nevertheless, the market still appears determined to take on the challenge there this week, as I feel there could be a break, and if so, above 63.30 leads on towards 63.80 to 64.45 and reassess from there. Any pullback, I expect to find support around 62.45 and firmer around 61.75 to 85. Meanwhile, Friday's softer than expected January jobs report reinforced expectations of the Federal Reserve rate cut in the coming months. While the unemployment rate dipped to 4%, the non-farm payrolls increased by 143,000 in January, following a sharper revised 307,000 gain in December. The data could prompt the Fed to keep rates steady, with policymakers cautious about inflation and signaling fewer rate cuts in 2025. Traders will also be watching this week's inflation data in the US for further rate cut clues, while assessing the Reserve Bank of Australia's projected move to lower its official cash rate from 4.35 to 4.10 on Tuesday, February the 18th, when they meet. Moving on to the euro, the market is still somewhat mixed after taking the challenge higher. Fell, but the US dollar was still a little bit lackluster as it closed around 107.90 in New York. Nevertheless, I still feel this technical pattern is a little bit mixed, but overall still finding good support if we look back towards this hammer and also from the region of 102 figure. Still, any weakness towards it should find demand. And overall, I do anticipate the bulls to take the market higher and on towards 104.15 to 104.65 and reassess. Keep an eye on the dollar though, as I feel the market may take a bit of a slip towards 106.5. The Japanese yen continues its strength, with the market price dropping to a notable low of around 150.90, and also posting a doji that's slightly mixed, but the trend is still somewhat strong when we look at the ADX. A little bit oversold, but nevertheless getting very close towards its target, which is seen somewhere around 149.2060. The break of 153.3060 supported the move and opened the door lower, and from there it hasn't looked back, and therefore further weight is seen on the support this week. But I do anticipate profit taking around 149.2060 zone and maybe even seeing a correction back to 152. The British pound saw much volatility last week after the Bank of England cut interest rates to its 19-month low. The Monetary Policy Committee reduced the bench rate by a quarter point to 4.5, which is in line of expectations, though two members surprisingly voted for a 50 base point cut. With limited economic data this week, with some of the currencies, traders are now focusing on the US data. Nevertheless, with the break that was recently seen and also rejection from that broad trend, I still feel overall the top side target remains towards the region of 125.5 to 127 as a broader call. So no doubt bulls will be looking for any pullback, as bargain hunters will probably step in and take the market higher. Turning to commodities, spot gold whipsawed and ended posting a somewhat shooting star and also posting a fresh record high of 2,886. Although we are somewhat overheated on the ADX and a little bit overbought, there's still much determination in demand that is taking the market higher, with talk around 2,900 to around $3,000 an ounce. This is on the back of the global trade wars after President Trump announced fresh tariffs on several countries. Trump plans counter tariffs next week, escalating the trade war. He said the action would affect everyone, but didn't specify the measures. So with the trend holding relatively well, somewhere quite low of 2,780, there's still good demand likely to emerge here. And overall, expect to see the price rise further this week. Oil, what a little bit mixed, but was still supportive around that $70 mark. Overall, though, from 69, 60, 80, the bulls are likely to step back in and see a rise back towards this top side of $72 a barrel to 73.30 and reassess. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start to the new week.